So the meeting is being recorded. Do we have Jerry Abrahams? Tim Hodges?
Jerry Abrahams is here.
Sorry, I just have to figure out how to connect my ear.
Tim Hodges? Kathy McKinnon?
He's here.
George
I'm here.
Perez?
I'm here.
Franklin Perry? Sarah Sanders?
Here. Okay, so we have 4 items today. The first is the budget, and there's a resolution on that for 22.
Hey, good morning. For your consideration this morning, I'll be presenting a resolution to request adoption for the 2022 annual budget and plan of operations. At the last board meeting, presented a draft to the members. Since that presentation, we did make a few revisions. One is a revision to the fee that we pay to each lender for originating our single-family loans. By making that change, it does impact our servicing line item. The second item or change is to finalize and update the amount that we would transfer into the ITA or the investment trust account and the opportunity fund. And last but not least is to update the lending plan by adjusting the amount for the 9% low-income housing tax credit based on the recent IRS revenue procedures announcement. I just want to note to committee, I did not receive any comments from any of the members since the last meeting. So I'll be happy to answer any questions the committee have regarding the 2022 annual budget and plan of operations.
Nassim, can you tell us what was the change on the fee to the vendors and why?
Yeah. So one of the things that we were looking into, and this was something that we have been researching, was regarding why we have not seen any pickup to our loan origination for single-family program. We did have a meeting with the Connecticut Realtors. Cindy Butts was in that meeting. And one of the things that we heard from the realtors was a point about how much we pay for lenders to participate in our program when they originate our loans. And then additionally, we did also some research checking with different states, because we know that our lenders, they do operate in multiple jurisdictions. And we realized we were at the lower end of the spectrum when it comes to origination fee. So in connection with the 2022 budget, we are recommending that we increase the lender compensation by 50 basis points across the board for servicing retained lenders and servicing release lenders.
Azim, can you just summarize what's in the budget for salary increases?
Sure.
Wait. Can we finish this topic,
Sorry,
please?
Commissioner.
Yeah. And that would put us, compared to the other New England states, about the same, a little lower, a little higher.
We would be.
Because you said you could,
correct.
You did
Yes.
other states.
Yeah, we would be. I wouldn't say it's the same. We would be in the middle tier because we did find that some places are in fact paying much higher. But then at the same time, when they're paying much higher, we also saw that they were charging a much higher interest rate. There is that corresponding adjustment. So the way we are doing it is We don't want to be too high. We don't want to be too low. We just want to be in the middle of the pack.
And I'm happy to hear that because that was my concern. Because as we reducing our criteria, and as we doing other things to increase the volume, and it impacts our income, then to increase, expenses at another area, that I'm not so sure we really need to do that. I mean, I think part of the problem is that they're so busy, they're doing so many other businesses that we're not as profitable for them, right? But at some point, that gravy train is going to stop. I mean, nothing goes forever.
Correct.
And at
Yes.
some point, we'll become the attractive one because, whatever's happening with the COVID-19 or the magic that we're doing in the state that we're so attractive now, everything in life stops at some point, right?
Correct.
But anyway,
Correct.
so I'm happy to hear that we're not the highest and we're not the lowest. I always like to be somewhere in the middle.
Okay. Good to know, Commissioner.
Yeah.
Being-
So-
I am
so-
down now, so I give up the floor.
Okay. Sarah, you were asking a question about the increase for the salaries. So if you turn to Lorraine, can you scroll? Let's see. I'm looking at the PDF here. Go. Just go, and I'll tell you when to stop.
Okay.
Yeah. Just go down. Okay, stop. Okay. So Sarah, we did set aside 521,000 to account for COLA and merit in the budget. Oh wait, one page before.
Okay.
This is, yes. So it's under somewhere in the middle there. No, you don't have to move, Lorraine.
Okay.
Go back up.
Okay.
Yeah. So in the text, there's a statement about how we are accounting for the hiring for the vacancy position. And then it says also the calculation incorporates the employee's award approved by the board plus an additional 521,000 to account for COLA and all merit adjustments.
So in general, what kind of percent COLA would they be getting, and generally, what would the average merit percent be?
Combined is 4%. So we are envisioning a split of 2 for each.
That seems reasonable, not excessive. Can we just see what the bottom line projected net income is with the budget?
Lorraine, can you go up?
Sure.
I don't know.
Up. No, yeah, just go back. Some more. Just
Okay.
go up until I tell you to stop.
Okay.
All right.
Okay, some more. Stop. Okay, scroll down. So right now we are projected, scroll down a bit more. 1.6, stop, 1.6 million. But this assumes we are expending the whole 43.8 million. And as you're aware, when we set up the budget, and it's noted in the memo, we do have about like a 10% cushion to absorb any shocks if we experience any in 2022.
Yeah, my experience is, given the way that you budget, that cushion that you just explained, we always do much better than budget. Is that kind of the trend?
It's kind of the trend in some way. I mean, I think one of the things that what we have seen, and then we are trying to tighten certain areas. So when we did the 2021 budget, of course, we did not expect that we will continue to be working remotely. We did cut down on the number of conferences because we knew that, it is going to be very seldom in terms of, participation. We reduced the amount of traveling, visiting sites, those kind of stuff, and then also office expenses, printing, so on and so forth. So there are certain things that we budgeted for 2021. We thought that we are going to go back to some type of a semi-normal, but because that did not occur, then of course we have all this unspent amount available.
Hazim, I noticed that so that the multifamily lending now will exceed the single family lending. And at one point we had talked about potentially doing a product to do refis. I was just wondering where that was and if there was any chance of that happening in the next year.
Kathy, are you referring to refi for single family or refi for
Yes.
multifamily?
For single family, yeah.
Okay. So one of the things that we are looking into going into 2022 is about the non-first time homebuyer product. The way that we are trying to roll the program out, the refi will piggyback on that product. So depending to how quickly we can launch the non-first time, because part of the challenge to launch that type of a product is we do need to update our procedures. And then we have to come out with the guidelines in terms of the eligibility. I have spoken with Lisa Hensley, who everyone will, I think Nandini is going to introduce her this morning. And she's very familiar and has a lot of experience in that arena. So she and I, we're going to work on the product. So depending to, all the other initiatives that we're pursuing, what we're trying to make sure that, when we do roll it out, we do it as efficient and effective as possible, because, we just have so many things on our hands, on our plate. So we just want to just be a bit prudent in terms of how we allocate resources.
Okay, thank you.
Hazim?
Yes, sir.
So I'm a little confused. I couldn't quite figure out under Exhibit 5 how you came up with the calculations for the allocations to the Opportunity Fund account. I know when we talked about this earlier in the year or last year, we had this idea that it was 50% of amounts due to the ITA would then be allocated to the OFA. But
Right.
I wasn't quite sure, and I know we have some carry forward, but could you just walk through how those numbers work, and then talk a little bit about then the expectations on how you're going to apply OFA for the budget.
Right. So just to bring everyone back, when we did the capital study back in 2020, one of the things that resulted from the study was the establishment of the Opportunity Fund account, which essentially is an account for us to pursue mission type initiatives. And the funding for the account will come from 50% of the earnings that we make on an annual basis. So for 2022, we are allocating 50% or 6.7 million into the Opportunity Fund. The remaining 50%, it goes into the ITA. Now, additionally, one of the things that we also did say in the capital study, we also said that any principal receipt made from ITA loans would be reinvested into ITA again. So the reason why ITA is getting a deposit of 34.5 million is because close to 28 million of it is in fact coming from older, or I should say seasoned legacy ITA loans that paid back. So that's from a funding standpoint. And then from a usage standpoint, what we intend to do, and again, this is a fund that was launched and announced in 2021. We did establish this whole concept about developer engagement for multifamily. And we also talked internally about trying to come out with a homeownership rehab program. So we think that how we're going to deploy the Opportunity Fund is to support initiatives or responses that we receive under the multifamily developer engagement. And for single family is to promote and to support some type of a homeowner rehab program for communities.
So the 28 million, that was the repayment of previously made ITA activity, that largely then would be allocated on the multifamily development and preservation. Am I tracing that right?
Right now, that's the plan. But we do have the ability to move it around, because what we would like to do is we do want to reinvest it in quote unquote quality asset. So when I say quality, it's not to say that we are not taking risks. It's just that we are making a distinction between what we fund using the ITA versus what we fund using the Opportunity Fund.
Right, with the Opportunity Fund being more speculative.
I
with
wouldn't
respect to
say speculative.
multifamily
It's more like when we did we brought down the certain interest rates to make a project able to support more debt, or we would structure a debt where the repayment would be deferred. So things that we know where there is a receivable, but then it's not something that we need it back quickly.
Okay, so now speculative is the wrong word, but more innovative or creative, maybe is a better way to describe it.
Right. Or something like it is more like a gap financing.
Yeah. Okay, thank you. Switching topics. One more question is, so the sort of the load, so the expense load, if you look at it in the big picture, is 60 basis points on program assets. I know that is going up by 6 or 7%, but that's okay because it's trending. It's been trending down.
Right.
So that doesn't concern me that it's going back up, but because it's generally it's lower now than what it has been over the last couple of years, which is good. But just similar to Sarah's question, the commissioner's question, how do we compare with our peers on that number?
I have not reached out to compare
Okay.
how what other states are doing. I think part of the challenge is we are one of the few states that rely more on balance sheet financing. Many states they do have either abandoned the balance sheet, or they do have a hybrid type of a structure where they would securitize and sell loans as they make them. So it's hard to compare, because the way that that math, the 60 basis points, is based on what's on your books. How much earnings that you're generating based on that assets on your books.
Okay, let me think about that a little bit.
I have a related question, Hazim. I know that consultant came in, recommended you get into the TBA market, selling off your loans in the TBA market, and that creates a lot of upfront income in many instances. Is there anything in here to go into the TBA market? Any in the budget?
No, we did not assume any TBA income for this 2022 budget. If we do start pursuing or start aggressively open it up, you will see I think an increase under the fee income. because it's a one-time fee. It's not really investment income. I guess I need to talk to Allison in terms of where she wants to book it. But generally speaking, we book investment income as something as a rate of return, versus if we start selling something off, we'll just book the income instead of annualize or amortize it over time.
Because I do think CHFA is different than other housing authorities in that you do the long-term balance sheet type approach and don't do the TBA. And I'm not saying that's wrong, because it does give you income over time and stability and so forth, as opposed to the quick buck. But just curious where that stood.
Yeah, so this goes back to Kathy's earlier comment about the refi product. If in an event we do pursue or we start opening it up and originate non-first time home buyer, to start it small or as a pilot, we would engage in a TBA product just to test the market, because it's something that we prefer not to put it on our balance sheet, because it's just easier to say, okay, this is how the execution looks like. What's the market, what type of response, how long does it take? So that's how we envision rolling it out, at least on a pilot basis.
Any other questions for Hazim on the budget? I think we have a resolution. May I have a motion?
I'll move. Jerry Abrahams.
Second?
I'll second it. Kathy.
Okay, roll call.
Jerry Abrahams,
Aye.
Kathy McKinnon,
Aye.
George Perez,
Yes.
Franklin Perry,
Yes.
Sarah Sanders,
Yes.
unanimous.
Okay, next item is the meetings schedule.
Yes, so this is just more to give an opportunity for members to comment regarding the 2022 Finance Committee calendar. We're not going to take a vote at the committee level. It is going to be brought up during the board meeting. So I just want to offer it up. In terms of the calendar itself, for Finance Committee, it remains the same. It will be on the same day as the board meeting at 9 o'clock. You will see, however, for Mortgage Committee, is no longer on the same day. And part of the reason why it's being done so is to provide opportunities for members of this committee to attend Mortgage Committee, and for Mortgage Committee members to hear and I wouldn't say participate, but to listen in for the Finance Committee.
Well, that explains why I was sent the Mortgage Committee outlook. Okay.
Hasim,
Yes,
can we
sir.
make sure that for people like myself that have someone that keeps track of their schedule, they also get this copy?
Sure.
Because, I've asked that any correspondence to me that goes to my executive administrative assistant. So I imagine that you got it, but I don't know that to be true or not.
Okay. Yeah, we'll make sure that we'll confirm with you when we send it out.
And also, when you say it's to observe and not participate, technically under Robert Rules of Order, any member could go to any committee member, or any committees, and actually ask questions. They may not be able to vote in that committee, but I just want to, make that,
Yeah. I
make that
think
point. Unless our own individuals' bylaws, which I don't remember, prohibits that. But
I
which
will.
is, asking questions is different than voting.
Right. Understood.
And why would you attend something if you can't even ask a question? So, if the rule is going to be that if I attend a mortgage committee, I can't ask a question, then I'm not going to bother, except if I have an issue, and then to bring up the issue at the board level, which makes no sense. Versus if I could ask a question, simple question, at the committee level and my questions answered, we could save a lot of time at the board level. So I just want to make sure we're clear on that. If the purpose is
Terry,
to
can
go
you
on a
clarify
search.
that for us, Terry? That,
Yes.
Yeah.
It's in the bylaws, Article 4, committees of the board says that at the committee chairperson's discretion, directors who are not members of any committee may participate in the committee's discussions and deliberations, but shall not have a vote on any matters as to which the committee is exercising the powers of the committee.
Which is basically Robert rules, if you ask me.
Mhm.
You know, that's what Robert rules are probably, that's almost identical. But I would like to have clarified whether the goal of the chairs are in general, because it can't be, you can participate as long as you're asking questions that I like either.
It would seem so strange to have, as a board member, to not be able to speak in any committee, you know what I mean?
Exactly. So,
Yeah. It would be ridiculous, I would think.
so
Um,
if before the meeting, you can let whoever you need to let know that that's a question, you know, and if the goal is, of course you can ask questions, you know, because why not? You
Yeah.
want to know if there's going to be a problem.
Yes, go ahead. Ken.
But I think what Terry just said is that we can ask questions at the other committee meetings.
Was
At the
there a
discretion of
qualifier
the
in the
chair.
beginning? Yeah.
We just can't vote.
At the discretion of the chair is what I heard. And I know English is not my first language, but I think that's what I heard.
Yes, it did say that.
Yes, my experience is like, for instance, on other boards, sometimes there's a personnel committee and I've wanted to sit in, you know, to hear what they're thinking, things like that, so. Just-
Look, again, I just want to know what the policy is going to be. That's all. Because I'll be honest with you, I don't care what the rule is. If I have a question, I'm going to ask it. You can overrule me. And if that doesn't work, then I'll put it in writing, you know, so I'm not worried about myself.
You'll also be able to ask it in the regular board meeting, right? I mean,
Exactly, which the chair
Yeah.
doesn't like, because then she thinks you're untight the chair, right? But I won't go into more details. I don't want to talk about inside, you know, inside internal philosophies. But again, I just want to be real clear that I think it's a great idea. I always supported that the two be in different times for that very same reason.
There is
So
a
I'm very
personnel
happy to see
committee.
it happen.
Terry, there is a personnel committee, right? But they
Yes.
just meet regularly, okay.
Yes, there is, sir. They meet as needed.
So will we be invited to personnel committees, I guess?
You can all get notice of it, yes.
I know I've done that on other boards.
And to be honest, you don't have to be invited. You're entitled to go. The question is whether or not the chair will allow you to even ask the question, right?
Okay, any more discussion on the schedule of meetings? Next item is a report. Allison Murphy.
Morning, all. Before you are the October financial reports. On the revenue side, mortgage loan and investment interest revenue are coming in 15.4 million below budget for the first 10 months of the year and 13.6 million lower than prior year. I know I sound like a broken record, but the year-over-year revenue variances continue to be mainly driven by the net reduction to the authority's program assets. In addition, short-term investment rates remain lower than last year. The average stiff rate is about 82% lower for the first 10 months of this year compared to last year. On our fee and income side, we are 6.4 million over budget through the end of October. The main driver for this variance hasn't changed from what I've spoken to previously. On the expense side, bond interest expense is below budget by 24.7 million for the first 10 months of the year and 18.9 million lower than prior year. As mentioned, prior months, the authority has issued more refunding bonds than long bonds. In addition, special and optional redemptions made throughout the year has resulted in the acceleration of original issue premium amortization, which reduces our interest costs. Administrative expenses are coming in 5.7 million under budget and 594,000 higher than prior year. However, when you exclude salaries and benefits of 21.5 million, the current year-to-date expenses are 330,000 lower than prior year's admin expenses. Lastly, the change in net position is above target by 22 million. Are there any questions?
There's no questions. We'll go on to the delinquency report. John Chilson.
John, you're muted.
Sorry about that. For the month of October, the authority purchased 137 loans totaling $29.3 million, of which 120 loans totaling $25.7 million were securitized, or 88% of our production. The remaining 17 loans for $3.6 million were whole loans. The average loan size was $214,000. Our mortgage-backed security portfolio balance at the end of October was $2.1 billion, a decrease of $12 million month over month. While our whole loan portfolio declined by 151 loans, or $19 million, ending with a portfolio balance of $1.3 billion at the end of September. Our overall delinquency rate for single family decreased by 5 basis points to 2.82%. And our carrying balance of loans in foreclosure year over year declined by $12.4 million to $31 million, while the number of loans in foreclosure declined by 93. The authority also funded in October 86 down payment assistant loans totaling $1.2 million with an average borrowing balance of $14,500. 57% of our October borrowers took advantage of the down payment assistance plan. With regard to loans, single family loans in forbearance, we had 260 loans in forbearance at the end of September, resulting in $191,000 of monthly P&I payments on a UPB of $31 million, or 2.2% of our overall portfolio of whole loans. 19% of those borrowers in September did make a payment, even though they were in forbearance. And then October, our forbearance has dropped an additional 61 loans, ending the October with 199 loans in forbearance. With multifamily loans, we had closed one loan in October with 4 payoffs. So we net 552 loans, so a decline of 3 loans month over month. We had permanent loan delinquencies declined by 7 loans, ending in the month at 6, with less than 1% of an overall delinquency rate. And then with the payoff of 333 State Street in October, we didn't have any loans, any construction loans in delinquency. And there were also no loans in forbearance for the month of October. Any questions?
I have a question. In general, are there any, and I don't mean to take a lot of time on this today, you could get back to me at the next meeting or in between. Are there any particular potential big issues in that forbearance pool, for lack of a better word?
The big challenge right now is addressing all the loans that had been in forbearance. They have an outstanding forbearance balance. We have basically 4 options for those borrowers to resolve that forbearance, probably being the most popular being to defer the forbearance amount to the end of the mortgage loan with no additional interest charged, but it would be due at payoff or a refinance or sale of the property. Anything resulted in a payoff of the loan.
I would appreciate it if you could provide us with some, that kind of detail, briefly, because at least from the job I do, it'll be helpful, because when I do get complaints from consumers, right? Because I'm the banking commissioner. And when I'm dealing with other banks, I will have something I could gauge about, right? then it will be very helpful for myself and my people to have something to go by, right? And I'm saying that same information from the banks that I regulate and the mortgage services that I regulate that are the ones that are doing it for the banks. So, you know, whenever you have a chance, if you could. And I don't mind that you share with everybody else. It's not like I'm looking for something. But if nobody else is interested in that, that's fine. I mean, I am.
Sure. Yeah, we can give you a summary of what we're offering and what the what our portfolio actually looks like. And then
And do you know how our portfolio is doing with the Unite CT? Or the CT Unite? I always get the names wrong. I mean, they're applying, are they qualifying?
yeah,
If any of them are, or maybe that's not a program that they're participating in.
well, the servicers all are busy working through what effectively are modifications on the vast majority of them. I mean, very few of these people actually had the funds to pay the amount that was forborne as a single lump sum payment.
Okay, but then maybe I misunderstood what you said before when you said that even though they're in forbearance, most of them made the payment. So I figured that. I understood that to mean something else, I guess.
Other questions for John? The next item is approval of the minutes of the Finance and Audit Committee, October 28th, 2021. May I have a motion?
So moved.
Second,
I'll second.
roll call.
Jerry Abrahams,
Aye.
Kathy McKinnon,
Aye.
George Perez,
Yes.
Franklin Perry,
Yes.
Sarah Sanders.
Aye.
It's unanimous.
Okay, any other matters? I mean, the one comment I have on this, inviting other board members to committees is certainly if any of the board members joined our committee, we would want them to be able to ask questions and participate. I would think, I wouldn't want to limit them. So hopefully we get the right guidance on that. Okay. Well, with that, let's adjourn the meeting. All in favor?
Aye.
Good. Passes. In a couple minutes.
See you all in a few minutes.
Yep.
Thank you.